Welcome back to the Fun Investors. Last time in part one, we were talking about the personal finance with Felix from the Trading Room, co-founder of the Trading Room. Today we're going to do part two, and we're going to go into stocks. But before we get into this tantalizing, exciting topic, let's just introduce each member and then we shall dive right in.
Hello guys, my name is Dixon Mugambi. Welcome back to our next session, and just enjoy. I hope you'll be able to learn about today's session. Yeah.
Hi guys, I'm Brenda. Welcome back to our channel. Today we are going to be talking about an interesting topic. I hope you learn. I hope you enjoy. Yeah, karibuni.
Yeah, excited to be here. My name is Esther, and today's conversation is quite a real one, quite a nice one. So pull up your chair, get your friends, start a watch party. This is amazing. Thanks.
Hi guys, my name is Gladys. Welcome back to Fun Investors. I hope you're going to stock up with this information about stocks and also use it to your own advantage.
Awesome. And my name is Makena Simani of the Fun Investors, and maybe we can just now get right into the topic. But before we do, Felix, we would like to listen to your voice, just hear your name at least.
Hi everyone. Just as mentioned by Makena, my name is Felix. I'm the co-founder for the Trading Group, and I'm glad to be back again for this session.
Wonderful. So we're diving right into the topic. So today, basically, we're going to go into stocks. I know a lot of us hear the stocks, listen to it on news, but are clueless. Like it gets in one ear and gets out the other ear. But today, Felix, please enlighten us, help us understand how we can get better in this topic. And just to begin, just in layman terms, what are stocks and why should we take ourselves into the stocks? Why should we get stocks?
Okay, so stocks are basically unit of ownership of companies. So at any point when there's a company that is issued, that is listed on any market, then they're basically stocks. Most often, if you're in a group, if you're in a chama, if you're in a small team, then people talk about shares. So the same way, if you're in the stock market, now you're having these shares, and then there is a tradable option which you're given on the stocks market. What happens is, whenever there is a company, now from the shares that you have in chamas, I know there's a point when if somebody wants to exit, for those of us who are in various chamas and circles, when you want to exit, then there's a point when you're told to look for somebody else to buy, or if there's somebody else who's willing, then they come in and buy your shares in the chama. Now on the stocks market, the same thing happens. It's just that now these are larger companies or state corporations that are listed. They give you an opportunity for you to buy into them and then also share a little bit of their profit. The same way that the normal shares in our groups and chamas operate. Thank you.
Yeah, Makena, I don't think we can hear you. Just come again.
Sorry, can you hear me now?
Sure.
Okay. I was just saying thank you, Felix. I'm sure there were a couple of questions that came in, so kindly take us through, Esther.
Yeah, I see a few questions have come in, and I think the first one, Mugambi, you can actually help us to ask the first question. So Mugambi, karibu.
Thank you, Esther. The first question that I would like to throw to Felix is, what are the stock market indicators that we should look out for before investing? Remember, we are not all experts or good in trading in stocks. And stocks market is quite complex for most of us. And I believe this question is directed so that people can be able to understand what they need to look out for before investing or trading in stocks.
All right. Okay. Now, at any point when you're investing, there are a lot of things that we need to look at as now when you're as an investor and on the market. So the basic thing that you need to look at any company is the past performance of this company. Don't look at the performance in terms of pricing, but I would encourage you to look at the performance of a company in terms of the historical performance, in terms of their books of accounts. One of the major challenges that investors usually have when they're investing on the stock market is that very few investors will always look on the performance of a company. As, maybe just to share an experience, most people always get into the market and they ask you, what is Safaricom trading at? What is KCB trading at? What is Mumias trading at? What is Uchumi trading at? And if you ask them why, the major thing is because they've had that so-and-so bought Safaricom when the price was down, so-and-so bought KCB when the price was down, and now it's gone up. Nobody would tell you that I've looked at their books of accounts and I think this company has some potential. So the first thing that we need to look at is the historical performance for that company. Then there are a lot of other indicators now when it comes to doing your personal ratios. There are things like book ratio that come in handy. There's the dividend payout. Dividend payout, what happens with dividend payouts is there's always a point yearly, there's a point when companies make profit. Now remember when we discussed about chamas, there's a point when once a chama has made profit, then they'll be able to pick up and say that we've made X amount of money, let us divide it amongst ourselves in terms of dividend. The same way, when companies make profit, they always take a certain percentage and pay it out to you as an investor. I believe that you would not want to buy a share that is not paying dividends. At least if you're holding this stock for more than a year, then you need to be given something to console you and tell you that your money is safe somewhere and it's earning something onto it. So I would always encourage you to always get into, look into some of these ratios like the dividend payout. Look also on the dividend performance over the past, probably give it a maximum of 10 years. For companies that have been listed on 10 years or probably a minimum of 5 years if you're looking on the dividend payout. Over the past 5 years, have they been increasing on the dividend? Have they declined on their dividend? And why did they decline? Or why did they decline on the dividend payout ratio? So those are some of the things that we need to look at. We also need to look at corporate management for these companies. You need to know who's handling the company that you're investing in. You need to know if Mugambi is the CEO of a company that is listed on the market, then you need to understand who is Mugambi. What experience does he bring to the board of the company? And also, in his previous positions, maybe he's not been a CEO for another company, but even if he was just a managing director, what value did he bring into that company? These are things that all listed companies at any point when somebody is appointed as a maybe if it's a CEO, a CFO, a COO, or a managing director, there will always be a publication for his historical corporate management. So these are things that you need to look at. Corporate management is one of the most important things. If you have somebody who's stable, even if the company has been dwindling in terms of profits, but you have somebody who's stable, who has a little bit of a higher corporate image, then you know that this is somebody you can trust with your money. So those are some of the factors that you can be able to look at. There are a lot more factors, but I believe that those ones can be used for you as a starter when you're getting onto the stock market. Thank you.
Maybe to ask Felix, when you talk about the historical performance of the organization, are we only looking at the profit and loss and probably the asset base of the organization, or what could be the quick things that somebody can pick from the books of accounts to see the direction the company has been taking over time? Because remember, majority of us, we do not have an experience in accounting, and of course, be able to analyze these particular books of account could be a bit difficult. What can you advise somebody who has no knowledge on matters of accounting, or how they can be able to pick up on a few things on those books of account and get to understand before they get to trade in that stock?
Okay. Now, when you're looking on the historical performance in terms of the books of accounts, the first thing that you need to look at is the earnings per share, which we mentioned earlier on. The earnings per share is always indicated on the last bit of the financial statement for the company. Just below they give you the overall year-on-year performance, they will always indicate the earnings per share. Earnings per share comes in very important because and the basic understanding on earnings per share is that if you have one share, how much did that share make in a given financial year? So at any point, if you check on the earnings per share to be lower than the previous year, you need to ask yourself why. You need to check onto the financial statements deeper and know what really caused this. If you look on the banks, for example, there's always something that is called a loan loss provision. Did it increase? Did it decline? And what are the major effects of such activities or such actions on the books of accounts for the company? Another thing that you need to look at any point as well on the books of accounts is the profit and loss ratio for the company, something that comes in very handy to you as an investor, so that you can be able to pick it up, because the overall profit, just the same way we have the normal x minus 1 or the x plus 1, where the x is the previous year and 1 is the current financial year. What level of loss or what level of profit did it make? Always check on a 2-year difference, so that you have, if the loss increased last year and this year it's reduced, you need to understand on why it's reduced. If the loss reduced or if the loss increased this year and the previous year it was lower, you need to understand what are the revenues that came in for this.
Yeah, so thank you. Thank you so much for that, Felix. Actually, it's good that you're bringing in the concept of not just looking at the historical performance of an organization, but also looking at the person who's at the helm of that organization. So who's doing the corporate management and how they're handling that. So I think there's also another question that's come in. Brenda, you want to tackle that question?
Yeah, thank you, Esther. Felix has mentioned about when you're looking at an organization, the indicators of if you want to buy probably shares from that organization is you look at the corporate management, you look at the dividend payout over the years, the historical performance, the book ratio, all that. So Felix, my question is like, when do you know when it's time to buy or sell these shares? Like, when is it time to buy or sell? Basically, that's my question.
Okay, now the right time to buy a company is always when the price is low. How do you know when a price is low? There's always a price list which the NSE issues at the end of every trading day. Always check on the 52-week day low and the 52-week day high. That gives you a little bit of an overview of the entire market over the past 1 year. So an example is, if you check on the 52-week low for a certain stock, you'd know that this is the lowest the price is. So if the price is going towards that direction, you know that gets into a right time to buy. Also, let us not buy the 52-week low when the company has a little bit of a poor performance. Always get on the 52-week low when the company is a little bit on a positive trajectory. Also, there are times when the market is down, so you need to understand when the overall market is down, like right now, due to COVID-19, the market has really taken a little bit of a hit. So this provides you with a better opportunity to buy, mostly for those of us who are planning to hold this stock for long term. And long term gets into about 2 years and above, or 5 years and above. If you're buying long term, you're not planning to sell in the near future, basically. For short term, probably if you're planning to hold the stock for 1 year or so, I don't think that is advisable for you to get into the market at this point.
Thank you, Felix. Just a quick one before you finalize on that question. Like, you know, during this pandemic, people are struggling. Like, you're here saving, you're here like you're supposed to buy shares because now they're low and all that. Like, should you buy now, or if you don't have like a surplus, are you still like should you be advised to buy still? Or should you buy only if you have a surplus amount? Should you like go into your savings and buy, or should you just buy when you have a surplus amount? So there's that debate whereby you're like, should I buy now? What if something happens? Is it time? Like, because of the pandemic, people don't know, there's so much uncertainties. People don't know what's going to happen next. Yeah.
All right. So right now, if you're investing on the stock market, I would advise you to have a little bit of a surplus amount somewhere else. If you have maybe 100,000 as an example, you can probably take maybe 50 or 60,000 into the stock market and have something that can push you through, because during uncertainties, then the market also has its own uncertainties. At times, the market can be depressed further than it is at this time, as much as it will recover in the long term, but at least for the near future, we know that the market will face a little bit of depression, the same way the economy is currently facing a bit of depression. So I'd advise you to have some surplus funds that is kept on the other hand for your personal and for your maybe your current spending, and then for the stock market you have investments for long term.
Okay, thank you.
Wonderful. So yeah, I can see there's another question here. Gladys, do you want to ask it?
Sure. After analyzing the historical information of an organization, looking at who is at the top of that organization, and even checking the right time to buy or even to sell, how much money would one need to buy the shares or stocks of a company? Maybe you can hint to us the minimum amount somebody would need to go ahead and buy shares or stocks in a company.
All right. So the minimum amount of shares you can buy for any company listed on the Nairobi Securities Exchange is 100 shares. So and then the minimum amount that you need to put really depends on the stock that you select to buy. Companies have various prices that they trade on. I'll use Safaricom as a major company that most of us have interacted with at some point. And then Safaricom, for example, is trading at around 2,028 shillings. So for you to buy 100 Safaricom shares, you would need to have at least 2,800 for you to get into the Safaricom stock. Then on the other hand, we have other companies that trade in very low prices. An example is maybe CIC Insurance or maybe Uchumi. CIC is trading at around 3 shillings. So for you to buy CIC shares, the minimum amount you need is 300. If you need to buy Uchumi shares, which is trading at around 0.3, then you know that you only need about 30 shillings for you to get into Uchumi. So the minimum amount for you to get into the stock market it's always determined by the share that you want to buy, and you multiply that by 100, the price of the share. Thank you.
On that same note, are there other expenses that you would incur as you're buying those shares, apart from the amount of the number of shares times the value of that share? Are there charges that you would incur for you to buy?
Okay, so at any point when you're buying a share, or an investment bank, because you cannot be able to access the market as an individual on your own. So these brokers will always charge you some transaction costs, and then you would also, the transaction cost always varies. There is the 2.1, which you're charged if the investment is below 100,000, and 1.8 you're charged when the transaction is above 100,000. So you need to be aware of that, the 2.1 and the 1.8 transaction.
Yeah, thanks for mentioning that. And still on the same point, Felix, about the brokers and not being able to go as an individual straight into the NSE to purchase a stock. Are there some names that you can mention, so that just for the benefit of our audience today, are there some names of banks or brokers that we can look out for in the Kenyan market and be able to practically go and invest with such brokers? So maybe you can mention, I know Trading Room, maybe you can equally tell us a bit about the Trading Room there and a bit about what you're doing on a personal basis, but then just mention some of the banks and brokers that we can engage with. Felix.
Okay. Now, at any point, if you want to select a broker, there are various factors that you need to consider. I believe I'll be able to share that with Esther so that she can be able to give you guys that as a description and on the description for the video. But then, on the other hand, there are brokers, the local brokers that you can be able to pick from. You can be able to choose from brokers like Faida Investment Bank. You can select Dan Blair Investment Bank. You can pick on AIB Axis. AIB Axis is the merger for AIB and Apex. That the merger, the new outfit came into effect, I think, on 1st of July. That's another broker you can be able to pick on, or Genghis Capital that come in very handy. Those are some of the top local brokers that you can use to access the market. Also, if you have banks, the various banks, the commercial banks that have an investment banking unit, banks like KCB have KCB Capital, Cooperative Bank has Kingdom Securities, and NCBA Bank has NCB Investment Bank that you can be able to use so as to get access to the market as well.
Wonderful. Thanks for those practical examples. And I think we have time for just one more question. Brenda, do you want to help us with that last question?
Yeah. So Felix, like, can someone trade in stocks or be a broker as a part-time job? Like, can you make it like a side hustle, just trading in stocks?
Okay. Now, trading in stocks for part-time really needs a little bit of liquidity. And by liquidity, it means you need to have a little bit of capital exposure, because you see, when you're trading in stocks, if you're trading for part-time and as a side hustle, then you need to ensure that you have a higher margin. So a higher margin, and here's an example. You take a higher margin and a higher risk. An example is you're willing to buy Safaricom at 26 and sell it at around 30 or around 29 within a very short period of time. You want to buy CIC insurance at 2 shillings, and 3 weeks from now or even 5 days from now, you sell it at 3 shillings so that you make a little bit of income from it. Now, you see what happens if you have a higher exposure and a higher liquidity. If you buy 100,000 shares, if this stock moves up by 1 shilling, you've made 100,000. And if you take it off net transaction charges, you probably made at least about 85,000 or so. So yes, you're able to trade on the market for as a side hustle and as a part-time investment for you, but you really need to have a little bit of liquidity, and you need to have news and time, because if you're trading, then now you know, because in the market there are two types of people. There's the investor and then there's the trader. If you're trading, then you know that you need to be ahead of everybody else on the market. When news comes in through, you have to ensure that you act on it. When there's probably there's any other factor that comes in on the market, like today, that is 29th of July, Scan Group has closed their books, and the stock has gone down about 45%. You need to have been ahead of the market so that you don't lose that as well. So these are things that you need to know when you're trading, but it's something that is possible, I believe.
Okay, thank you, Felix.
Yeah,
I think
thanks.
that's yeah.
Yeah, thank you, Felix. And I believe today's discussion was just a tip of the iceberg. And for our members, the members of the Fund Investors family, if you'd like to hear more about this, you can be able to join the upcoming class of the trading room. They'll be having a class this coming August, and we have a specialized rate that is being offered to you. You'll be able to see more details of this on the chat box below. So please make sure you log in and let us know that if you're interested in this, and we'll be sure to connect you for more information. So final remarks from you, Felix, even as we wind up today's segment.
All right. Thank you, Esther. I believe that for all of you who are willing to get to the trading room session, it will be an eye-opener, and I encourage you to take this personal finance session for all of you. And thanks to the Fund Investors team. I hope that everybody who's watching from wherever they are, they've probably gained something from today's session. And I'm always open to more sessions. So thank you. Thanks a lot.
Thank you so much, Felix. And this is it for us. Up until next time, in our next video. Bye, and please make sure to subscribe, make sure to leave your comments below. We'd love to hear from you. Bye for now.